Good morning, good morning, good morning. Welcome to the last day of May, 31st today, end of month, end of the week, before we start June next month already. So welcome everybody, and let's straight away kick off. Don't forget, up to Sunday, we'll have this special offer that we are doing a couple of times a year, max, at ForexAnalytix, and you can sign up with a discount. And if you are signing up for a semi-annual or annual subscription, you will be automatically entered into this free trading funded account worth 100K. That's really worth it. And by doing so, by signing up, you will also get access to one, if not the most lively trading community on the planet. Okay, I mean on the planet, and perhaps even beyond. All right, so no time to waste. Sign up, and we see you in our rooms, as you say, Bran, in the universe. Okay, first let's do a little bit of politics and geopolitics today. So first of all, on the political front, we have seen those results coming in from South Africa, where ANC is now projected to lose its majority. We have seen the rand come under pretty severe pressure over the past couple of sessions, just because we don't know yet which kind of coalition there will need it to be formed. It's just ticking up slightly the rand from its lows, but we had a pretty big fall in the rand. The normal coalition that may be expected will likely be the the Democratic Alliance, I think. But Zuma came up today offering his services as well to form a coalition, which, if he would come back into the frame, would probably not be seen as a very good coalition by the markets, and the rand could suffer a bit more. In the meantime, I'll have a look at the rand and those levels, because I forgot actually to put up the chart yesterday, because there was so much else to talk about. But we are coming into interesting levels pretty soon, okay? And we having month-end flows today, so there may be a little bit of ping pong coming. Next on the political agenda is, and Brand just spoke about it, is the fact that ex-President Trump got convicted. Now, it is very, very rare that prison sentences are declared according to those trials, on the back of those trials, and being an extremely special case, of course, being an ex-president, there may not be any penal or prison sentences to follow. But we don't know yet what really the result is going to be, without diving anywhere near into more politics at all. We know that Trump's entourage was actually thinking about like very big restrictions on trade, letting the dollar dive, and whatnot else. So those things are perhaps something that we will, over the coming months, need to look at how his presidential standings are how the polls are evolving, whether it's going to be more going on to Biden's side again, and that may, in a way, impact our markets as well. So this story needs to a bit of follow-up. Okay. On the geopolitical side of things, Biden finally changed his mind, and he allowed US supplied weapons to be fired outside of the Ukrainian borders, of course, mostly meaning into Russia. And we straight away had responses from the Russian side, and no later than a few minutes ago, the Russian Medvedev was saying that Russia would consider any long-range weapons used by Ukraine to be controlled by NATO. So, as I already said, and we've been saying this week, we need to pay a bit of attention to what's going on the geopolitical side, and especially, you know, um, has it created an extra weekend risk? We never know, but that is now coming back to the forefront, I reckon, and we will need to pay attention to what's happening again on that front. We've already heard earlier this week that Norway, Finland, and the Baltic states are planning a drone wall to protect their borders. So, I mean, the geopolitical side on that front is coming back to the fore a bit more than where it was. So whenever anything happens there, where the market have been pretty numb to what was happening for quite a while, that's humanly very bad. But unfortunately, that's how market just work. Money has no fear, and money has no nothing to really do. Money creeps where it can make more money, you know. That's just the way things go. But so we have to pay a little bit more attention to it anymore. And in staying on the political side, we do have those Mexican elections coming up this weekend, and it should be a shoo-in for the ruling party. Sheinbaum, who is leading the polls over there. The polls have closed, by the way, yesterday, so there's no fresh percentages rolling in before we will have the vote on Sunday. She's still very much in the lead, but the real issue may be the Congress, and that's where we should closely monitor the results coming in of that election, because they're planning all sorts of reforms on each side of the aisle, and it depends how big the majority would be and how easy or how difficult it would be to press forward with those results. The Pemex issue is still very much unsolved, I will say. They're still bleeding money. There are plans for big reforms to prop them up again. But we will have to see exactly how it will work in Congress if those reforms can be pushed through. So depending on those kind of results, they may have a bigger impact on what investors think about the Mexican peso than in the immediate than what the headline presidential results, because that should really be easy peasy for the ruling party. So that from the political side. Did I have anything else noted regarding politics? I don't think so straight away. So we can move on to a few other headlines. And then before I forget, in theory, in about 20 minutes or so time on top of the hour, we should have the Ministry of Finance in Japan come out with their numbers. You know, a month ago when the interventions were suspected, we had numbers coming out of the Bank of Japan where we could relatively close to reality, I would say, estimate what interventions they have done. But the MOF then decided to delay the production of those numbers to the end of May, and we are end of May. And of what I can read, we should have those numbers hit the wires in about 20 minutes. So if I would be busy talking about something else, if anyone in the chat here would see those numbers pop up, that would be really helpful. And the guesstimates are anywhere 50, $60 billion, 55, 9 and a bit trillion yen. So those are the numbers that we are expecting. So if they're anywhere far away from estimates. Keep an eye on the yen because the yen could be on the move. Okay, right. Cheers, Gav. Yeah, I know it. I know you would keep an eye on it. Thanks. All right. Okay, let's move on to other stuff. So staying in Japan, we've had again the MOF talking about watching the markets very closely. But since we are in month-end territory, I think I've got the impression that most of the flows in yen that had to be done by the Japanese are done now, and we see the yen coming back a little bit. I would not exclude more to be done later on today, but there's also something else we need to look at, and I'll show that in a few minutes too. So in the meantime, watch what's happening because all the yen crosses are starting to come back bit, especially euro yen is already well above 170 again. So yen is again losing some of its steam, and that is despite these numbers that we had from the Tokyo CPI. We had a Tokyo CPI coming out again above the 2% mark here, but the core also ticked up but remains below the 2%. So a bit of a mixed bag there, I would say, but it just keeps the Bank of Japan on course, I think, for their normalization. You know, the jobs to applicant ratio coming down just a little bit, but that is still like really very low number. So the job market is still extremely tight over there. So that should not hold them back to do anything at all. IP, very volatile number, coming out a little negative, but then on the back of a relatively positive number there. And there's a few calls again from Japanese ex-officials or people in close to Japanese monetary policy works that are calling for earlier hikes, but most of the market seems to be directed towards July now. So everybody is kind of dismissing the possibility that the Bank of Japan would go into June. And as I've been saying a couple of times, I still won't completely rule that one out. Also on the Japanese front, a bit of other news, and that is that the Japanese government, and I think that may in a way have to do with today's move, in particular the last few hours. There's been an article out that the Japanese, and I'm going to read the article again because they are planning to invest up to $650 billion for dynamic investment again. So that is going to create another whale, potentially, you know. And I'm going to put the link, the Nikkei link, in our chat room. So they're planning to go into more active investment. Okay, there's always, of course, a fair bit of it that will stay at home, but we cannot forget that in line with what the other whales and especially GPIF are doing, they also invest parts in the outside, you know. So there's also a big level of external investment, and that may be this article may be somewhere why the yen is losing a bit of steam today because the market's kind of anticipating that this kind of money, and imagine that they invest 25% outside, that would be somewhere in the region of $150 billion to be invested outside of Japan. Some of it is hedged, of course. We will not know details before the thing really goes live, but I would not completely dismiss that. So that's a bit on the other side of what the Bank of Japan may do, or the MOF may shout about the weakness of the yen. And we also had comments today by the Keidan Ren again that dollar yen beyond the 150 is really weighing on the consumer. cost of living too high, and that MOF should do something about the weakness of the yen. But then listening to or reading these kind of articles, it really puts really everything in doubt again, in my opinion. So that on the Japanese side. While we're in Asia, let's look at those Chinese data. And the Chinese manufacturing data PMI dipped back below 50, okay? The services muddling around this 51 level, which is still expansion. But it dipped back below 50. So where the Chinese yuan was doing better yesterday, it's now losing a bit of steam again. And we are getting voices again calling for a Chinese a devaluation 2015 style, to try and prop up the activity again, make the yuan weaker, catch up with what's happening on the yen side as well. The thing is though that that is not really part of his plans, and that is one of the main reasons why the PBOC is stubbornly keeping their fixing closer to 710 versus 726 on the offshore CNH market. Xi really rather would like a strong CNH or CNY coupled to a rebounding economy, which would then attract investors. Investors are easier to be attracted when you have a stable economy with a stable currency. Now, it may be that a devaluation, of course, makes the yuan cheaper, and that investors will then find it cheap enough to invest, but that needs to be taken with the necessary bags of salt. I think these calls for Chinese devaluation, but just know that some in the markets are now looking for the possibility of this to happen. Okay, I say it's right now the way that and as we know from last year or the year before, that he's got more powers for the monetary side of things in China as well. I'm not sure that he's a big fan of letting the Chinese yuan devalue right here and now. On the other side of the middle, and then I stop about China, is that they are struggling with their external trade, everything, the decoupling from China. They are struggling with it. So a deval may make exports again cheaper, but then we are back into the geopolitical side of things, and that's not really going according to any of his plans either right now. And we know all the reasons why. Next. Okay, we are going back to yesterday, and let's look what's happened. There wasn't really a lot going on the yeah, actually, yeah, we had this. Sorry about that, because that came out during FACE. We already commented on that. Those numbers are a bit weaker than they were expected, but still, you know, they are Q1 numbers. In the meantime, we have already had several Q2 projections already revised as well, and we rather would like to know what's happening in Q2 than to know what really happened in Q1 now. The thing is, though, I think this one is a bit weak. Those corporate profits, that was a bit of a surprise. And also, there's another one here. Yeah, here the consumer spending were also not really very good. So those are, in my opinion, things that we really need to keep an eye on going forward. Those two numbers here. Okay, bit of housing data. In the meantime, in between, we had the South African Reserve Bank interest rate decision. Didn't change anything, wasn't expected to do so. There was a little bit of a risk that they would say something about the inflation target. We haven't had it. Actually, on the contrary, they did revise their inflation expectation to come closer to target from the end of 25 to rather to mid 2025. So that is a bit of a bringing forward those expectations, which potentially also weighed a little bit on the rand as well, in addition to already those election results. Rest of the numbers pretty much, yeah, didn't have any impact. We saw in line with the API the day before, we had a bit of a bigger draw on oil, but oil really didn't respond much when it came out, and a day later or 12 hours later, we're trading a little bit lower on oil. Next, yeah, then we had a slew of central bank speakers. The Fed guys were all out. First of all, Williams, he said that the process or the progress on lowering inflation is still slow. Inflation is still too high, but should moderate in the second half. He still thinks that we are on the way to lower numbers, but as everybody at the Fed is now saying, they are not in a hurry to cut rates because they still think it's a bit of a bumpy road. Bostic, pretty much the same thing, says that inflation will come down very slowly. Goolsby then, but he's a non-voter, Goolsby, okay? He said that the issue now is whether the US will face a traditional trade-off between inflation and employment. And he did say that it's extremely important that the Fed hits the 2% inflation target. But let's just remember that they don't have to be at 2%. They are just needing to move towards the 2%, but stay towards those 2%, okay? Logan was also out that saying that there's still good reasons to think that they are on the path to the 2%, but again, taking the bumpy word up in the speech. So all about on the same line there. I haven't seen anything about Bailey yesterday. He must have been just on the Guinness with his Irish mates, investment mates over there. Nothing spectacular came out of there. Actually, I haven't seen any lines at all. Moving forward, we did these China, bit of housing data out of Aussie land. Aussie weakened just a tad on the Chinese data, but it's holding its levels pretty okay. And again, we're still in month end. Still a possibility that Aussie is doing relatively well into the month end, but the possibility is there. That's what I'm just saying. Okay, no trading advice here. Then we had a bit of that is not. I think that the core has not been taken up here. The Dutch CPI also remaining a bit sticky. We had pretty good late in the day, pretty good housing starts and construction orders in Japan. Also a very, very volatile number, this one, the construction. So I wouldn't hang my hat onto it either. Housing starts, pretty decent number. Then we went on to UK house price index, also ticking up a little bit, but no impact on the sterling whatsoever for now, because there may be something else at play. And I'm going to talk about that in a few minutes. German import prices and retail sales. Okay, import prices little sticky on the month-on-month. Retail sales a bit weaker in April. Comes on the back of a pretty decent month, which actually also had been revised a tad higher. So ball back in the middle, 1-1, and we kick again, I think. And then just a little word about the Swiss franc here, okay? Better retail sales again. And remember what I said yesterday about that trade balance. It's also an April data number, and this now looks like activity in Switzerland is finally starting to pick up again after a very long while of complaining by the mainly the big Swiss companies about Swiss being too strong and etc. And after the rate cut, and the Swiss weakening Q1 and the best part of Q2 in this year, we are now seeing those activity numbers starting to pick up. So this is one going forward, coupled with what Jordan told us yesterday, that he starts to keep an eye again on the Swiss franc. This is now one that we need to keep a bit of an eye on Swiss franc. Okay, I'm not saying that the Swiss franc is going to get back everything that it's lost, far from, but we could just be in. Oh, there you go, Joao. I mean, it's your wife supporting the Swiss economy, right? Um, but this is something that could just start to stabilize the Swiss franc, okay? And then moving over to those European CPI numbers, okay? So we had the headline CPI staying where it was in France, but we had the harmonized CPI sticky again. And then I'm quickly jumping over to what's happened in Italy. We saw pretty much the same picture, a bit sticky, and then especially, but we had those numbers from the individual countries already. So we had sticky CPI numbers in the Eurozone, okay? And I would say especially the core one here came out quite a bit, 0.2% higher than what the expectation were. I think it's pretty normal and pretty consistent with what the individual countries were showing us. So it should not come as a real surprise, but it could be a little bit of a head scratcher to what the ECB bots want to do post June. We've already said that June should really be a done thing. They all pretty much announced as much, but then I think the what's coming beyond, there may be some question marks. So we are going to be very, very data dependent with everything that's going to come out in June to know whether July would be on the table or whether the hawks are going to come back and say that, well, no, we really should wait until we see better inflation data coming in before doing a next rate cut, okay? In between, Norges Bank keeping the same amount of Norwegian kroner sales. We have seen over the month of May that it did not really have too much of an impact, but just know that Norges Bank is continuing to sell, let's say, to the tenor of about 50 million euros a day, which is not a lot in a global market, but it's just consistent. Selling 50 million euros, no, buying 50 million euros equivalent of foreign currencies, selling Norwegian kroner, okay? Still a stellar unemployment rate over there. What's next to come? We've got that much awaited PCE coming in today. Now, again, this should be a well-telegraphed number because all the components that needed to be put into this have already come out. So it would be a surprise somewhere if that comes out away, or at least more than 0.1% or so away from expectations, okay? But it's going to be a mover today, especially if it comes in the direction of any month-end flows or so. It could be an accelerator to what happens into the London fixing later on. So keep a very close eye on what's happening there. And then if in turn we see the month-end flows go against what may be insinuated by all this PCE data, it could create an opportunity to create a bit of a counter trade opportunity come the 4 p.m. fixing. Okay. Elsewhere, Q4 again. Canadian GDP data. It may have a little bit of an impact, but I think it's very much in the rear view mirror. Again, this one. And then we have Chicago PMI and again an Atlanta GDP now. Another one of those revisions coming in for Q2. Okay, I don't think that the last revisions, unless it's really far from expectation, didn't have too much of an impact. Chicago PMI coming out as well. And then we have Can you see this? This is the MSCI rebalancing change and turnover summary. And that, ladies and gentlemen, is also happening today. And thanks to James in the room for bringing that up today, because it seems to have already an impact this morning on all things sterling, for instance. Sterling has been on the weaker side, especially if you look at euro sterling, for instance. It has been much weaker than the euro, for instance. You wouldn't notice it from sterling yen for sterling yen, but that's because the yen is weakening even faster. But the sterling is being a little bit on the weaker hand this morning because before the day is over, and that may be one that is at play as well. Coming into the fixings later on today, you see that there is a roughly, the net trade value here is a column that is important. There is roughly about $4 billion equivalent of outflows of the UK to be done today for the MSCI rebalancing. And I think some smart cookies or those who had like really early orders for it, that there may be orders throughout the day. They may already be on the ball. And since this morning, I think that's one of the reasons why we see some of those flows in the sterling right now. The other one of note is a bit of outflows out of Japan as well. $1 billion. I mean, don't. It could be helping the yen a little bit weaker, but don't go overestimating $1 billion in the market. Okay, I mean it's really a drop in the FX oceans. Here we go. Thanks, Gavin. So Japan spent 9.8 trillion yen on FX interventions in the month of May. So we have the number 9.8. Quick conversion. Let's call 155. That's slightly overestimate. So we are in the $63 billion area. If you take 155 as a midpoint of those of where they intervened roughly. So yeah, thanks Gavin for that. That's roughly we said somewhere 50, 60 towards the 60 area, shown in the BOJ numbers. So MOF, we are very sorry, but you could not surprise us with those data. Then thanks very much, Gav. So, okay, this is what's going on for the rest of the day. I'm just looking at it. Sweden sees a bit of inflows here, and Germany, France. So, all in all, the euro sees a little bit of inflows here as well, Eurozone. So, that may have a little bit of a help as well for all things euro into the fixings, perhaps. So, that's the other interesting bit that we can look at for today. Whew, here we go. Finally, let's look at a few rates. Yeah, I had this one on because I'm having just a real tiny bit of this one on the Euro Aussie. I think it may be an interesting one when we close the month, especially when we are going to look at risk and especially where we are going to close the month, because we've been trading in this kind of a triangle. And if I look at all those European bonds, the way that they've been trading so far this month, they have been very, very underwhelming. They have actually underwhelmed the US bond market into a way. And with the ECB about to cut, I know that inflation is a bit sticky, but I still think that they are overdoing the picture a little bit. So let's say that I wouldn't be surprised, and I'm extremely slightly biased that this one could go for a little bit of a walk lower come the end of the month and the start of June. Okay, it's just a feeling that I have, and the way that I'm looking at the euro. I'm still not a huge fan of the euro. Of course, if we start to break, and then we are moving over to the euro dollar. Not around month end, okay? If this is a move, a month end move, I'm not going to really take into account that we are breaking 109, for instance, okay? But I would not exclude a little bit of a continuation here. Who is not cutting soon? Joao? I think, well, ECB should be a done thing in June, right? Okay. Because they all virtually announced it. I mean, if they don't cut in June, that would be really taking the piss, and they can all put in their resignation. Oh, Jordan in Switzerland then. Okay. All right. So I think there's a possibility on the back of month-end flow still that we are going for a retest in those 108.60s. But be careful for the timing, okay? Because as also been rightfully noted, last month was a cleaner fixing, and things moved, currencies moved the way we were expecting it. But we've also seen, as noted, that for instance in February we had the move according to the models until half an hour before the fixing, and then all of a sudden everything reversed. So keep an eye on the clock today, okay? Keep a very close eye on the clock, and then we will see where we close for June to start with the ECB next week. But I think there is a possibility. I said it yesterday. There is a possibility we hold here, and we're starting to move back up closer to this channel, even move up into. But unless the PCE data come out weaker than expected, it would come as a surprise to me that we break above 109. So this is about it. And if PCE comes in as expected or even overshoots a little, then we would see a little bit of a move there. I'm going to be very tempted to counter trade this. Sterling, again, we are holding this level rock solid, but then watch out what's going to happen towards 4 p.m. London time, as I showed this MSCI rebalancing, and perhaps a bit of euro sterling to be bought. Watch out what's happening after 4 p.m. and going into June on this one. Okay. We are around this 85.30 zone. If we would go higher, I think the next one here is the next level would be around 85.5. Is it possible to go there today? Of course, everything is possible in markets. But if it goes up there, I would assume that according to how the economic picture looked like, that would be sort of okay. Cable is still holding, right? I told you about those levels here below 127. We're still holding, and we are turning around that 127 and a quarter. I said yesterday we could go for a little bit of a walk higher on month-end flows. I think it's been stopped in its path by those possible MSCI reweighting, rebalancing things. And it's just possible that sterling hangs around here for the rest of the day. End of month flows, if they would really have to be done still, perhaps a little push through, but may just be counterbalanced by everything else that's going on. Yen can't hold a bit. Can't hold a bit. I told you yesterday about this 156.5. We had a bit of month-end flows out of Japan with that weakened Nikkei. Also, so we went back to have a look early doors to what's happening closer to this 156.5, but it's already back up. I'm not excluding a little more of yen to be bought for the month end, but if nothing really changes, and if the Bank of Japan is not really the Bank of Japan is not really stepping up its efforts to hike also. By the way, I forgot to mention, they announced their JGB buying for June, and apparently they kept it at that reduced speed, but they kept it at the speed that they were this month in May. So that means that they are still going to roughly balance out the redemptions for this month. So anything else will need to be seen where those JGB yields will be going. So for the close of the month, still keep an eye on what's happening in the high 157s, I would say, and 156.5. That's those are your closest levels. And as we can see, You know, we had this move down back to the channel break trend line. Again, we tried, and well, I'm going to go a little closer here. Oh, I don't have that trend line in here, but okay, that's all right. So as you can see, we had those early morning flows, and since then it's been gradually moving up again. This euro yen, and we're already nearly back to the highs we were on Wednesday. So keep an eye on what's going on around 170 and three quarters. We are really not far away. If that goes, then we could actually end the month close to the latest spike highs. That is all within the possibilities of the day. 169.5. That's your magic level, and I would also call it the magic level going into the early June. All right. Okay, and now I need to talk about what's going on in this rand here, because yesterday I forgot to mention it. So we had this already pre-elections. We started to go up. Then we had the election projections continue to ramp higher. We had this first move up here, little through the 50% of the April into May decline. Stopped there, went back to test this little trend that I've left over time, and it seems to have been playing a part again on the 38.2, and then we moved higher. When it held here, I bought a little again, let some pieces go on the way up. Now we are trading actually just below the 50% of the wider move, which is the one that we started all the way back in October 23, and also which is not far from this one here. That's the 61.8. Yeah, we went to tag it, and it stopped around there. Look, for the end of the month, the end of the week, I'm not sure whether we are going to push through, but I would expect that any setbacks into this zone, perhaps already here between 65 and 70, we may find buyers, and then all will then depend on whether we find the correlation that investors are going to, the coalition, sorry, on what investors are going to like or not to like. Okay, so keep an eye on those levels. I think ultimately with the reaction that we have seen in the immediate aftermath of those first projections, if the investors don't get what they like, we are likely on our way back to levels in the 1920 zone. And over here, I would really reassess to where this move can really go, because there's the rand part, but there's also the dollar part, okay? And then next week we will already have important dollar news as well, because we will have the labor report. Yeah, right. Makes going into the elections. We've seen this correction and a bit of a really rapid couple of days, near panic move really on the dollar mix. We are closing in on the 200 daily moving average. Okay, 17.15 going into the weekend. Of course, a lot will depend on the outcome of the election. It should be relatively straightforward, but never know, and that's why the market also is on its toes. Okay, I mean, if there would be something that the market wouldn't like regarding that Congress vote, for instance, we could go for a walk back up into that 1740 zone where we stopped already 3 or 4 times. Okay, so keep an eye on that 1715. I don't know what's going to happen now for the end of the week. It could be enough here. I would say it should be reasonably enough around here, but that's going to be important for the reopen next week. Not so much the close today, but for the reopen next week. And then moving over to what's happening in the Euromex, same thing. We are very close to the 200 DMA, okay, and also close to some Fibonacci activity in the 18.5 area. We have broken above the more medium-term channel, okay? on this move, 1830. So start next week. This is what I'm going to watch for this one. And I'm still looking at the interest rate differentials and everything. I am still looking at potentially, if the elections go according to plan, for a resumption of the slide down, okay? But it needs to get back below 1830, 18 and a quarter, okay? 1830, 18 and a quarter, 18 and a half. It's a pretty easy range to monitor starting next week. I'm not going to trade it today ahead of the elections, and we never know what's going to happen on the geopolitical front elsewhere either. And yeah, that's about it. Oil hanging around, having a beer, watching the game. Still the same levels. 23.65 top side, 23.5 in the middle, 23 and a quarter, 23.15 to the downside. Silver is correcting a little bit the end of the month, but we're still staying comfortably above the latest corrections. Yep, thanks, Brand. Anything else quickly before I go? If anyone wants to look at anything in particular before I close for the week. So we're turning around in this Aussie, we're turning around 66.5. I do think that still, as I said yesterday, there's a possibility for a little push higher. I'm just a tad long, and I will be a happy profit taker around 4 p.m. I'm not gonna go into the weekend with a lot of positions, really, because I want to know what's happening geopolitical and at the start of June. Okay, folks. Gold, I just said Joao, but perhaps you missed that little bit. 23.5, turning around, 23.65 above, 23.15, 25 below. I have no preference. I think it's mooching around now, and we wait to see what we are going to start June with, Joao. Really, there's enough of geopolitical risk, you know, to not initiate something today. If you really want to play it, I'd say play the range, play the top and the bottom end. Trend line break. Frederick, trend line break. This one? Yeah. Yes, but it's a sideways break, Frederick. It did trigger a few stops. But then if you look at the global picture, we're coming back, and yeah, exactly. I think Gavin is correct. Like we're 32.5 right now on silver on the broad side, but this looks to be just like a bit of a very weak hands getting out, because we're already back around 31 and a quarter. It's not really breaking down. Okay, so again there, Frederick, I would say, like, watch what's happening at the start of next week, and when we start June, fresh month, let this month end flow all go by, and then we'll pick it up again again next week. For me, nothing's changed. I'm still in my very long-term longs. I do trade them around from time to time, but I'm already thinking that if I see a move down to 30, I was planning to, or hoping even, to get back to 28.5 to reload, but this price action is not telling me that we are going to get there anywhere soon, but never say never. And on this note, I will thank everybody to be with us day in, day out for the month of May. We see each other in June. Don't do anything stupid today. I don't want to hear any horror stories when we come back to start June. Friday, last day of the month, that's not where you want to make your month, okay? But for sure, don't start to lose it. Thanks, everybody. Have a nice weekend. See you on Monday.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.